Jonathan Barratt is joining in, his Chief Investment Officer at ETO Markets. Jonathan, very good morning to you. So much to unpack geopolitically and across the world and across continents in the last 36 hours or so. But let me just start with the US-China trade deal. We don't know the contours of the deal. We don't know what the deal even looks like and if it will go through. Do you think it would be too early to celebrate, or is there enough there to say that the worst hit of the trade tariffs, the trade war might be over?
Good morning. Well, I think there are two things really to consider here. The first thing is that a deal was done with the UK and the US, so the market's quite happy about that. The deals will be done. That reflects that Trump comes out all firing and blustery, and then they sit down at the table and they do a deal. Similarly with China and the US, yeah, everyone's saying they're going to do a deal, but you've got two very different economies at play here. So I think it's too early to actually say, yeah, a deal is being done. I think a lot more needs to be happen. You've got one country that has inflationary concerns with potential for stagflation, and the other country, China, who just had its CPI and inflation data out on the weekend, and it was woeful. So we've got deflation versus stagflation. But I think a deal will be done. But I think at the end of the day, the most important thing to the markets and investors is that tariffs will still be imposed. That will still be a problem for the economies down the track, and that'll result in increased inflation pressures, particularly in the US.
Hi, Jonathan. Morning. Alex here. I'm just wondering the perspective on India. And of course, there's a lot that's happened over the course of the last few days. And we've just pointed out to our viewers that last night was the first night of calm in a while. Foreign institutions on a net basis turned negative on Friday after 16 straight sessions of buying. And I'm just wondering whether they wanted to keep their positions light ahead of the weekend. They want to take some money off the table, perhaps. What is the position now, you think, with this sign of stability, of relative calm?
Look, I think the most important thing to think is if you've got relative calm there, then that creates confidence. Remember, the Indian economy is one that's got greatest confidence around the world. It's poised, as we know, to do terrific things over the years. But I do think this little element of uncertainty sits there. If we've got a relativeness of calmness or economic calmness and obviously military calmness, then that provides that confidence. But I do think that people will push to the sidelines until they get the clarity they actually need to see that this conflict is certainly past itself, and then people will get back on board, start investing to say, well, there's lots of opportunities there. But at the moment, when there's always this type of conflict, people tend to move to the sidelines and wait till they see a clearer outcome.
Jonathan, I'm going to go a bit micro and try and understand, good afternoon to you, of course, try and understand what do you think about crude, considering the fact that there is possibility of multiple trade deals and therefore business returning close to normalcy. But at the same time, OPEC and OPEC Plus effectively has done and announced what it has over the last 1 week. Is the trend lower, or are we going to see consolidation, or actually we might see high levels? What do you think?
Well, I think it's quite interesting because OPEC Plus have come out and said we're increasing supply, yet the market's sort of been quite steady, quite volatile at this lower end. So I think the fact that the market's taken it on, and we didn't see what we saw a couple of years ago, where we saw the market actually tank, in my mind suggests that perhaps we are getting close to a low or sideways price action. Obviously, if we do get this sort of really important trade deals out of the way, people will say, okay, look, I can really see what's happening here. The deal will be done. I think we know a deal will be done. The question we have to ask ourselves is further down the track, will it be inflationary? Will the deals result in economies slowing down? But at the moment, I think we are at a relatively stable price for crude. I expect that to happen for the next couple of months until we see more economic numbers come out with the fact that it is or it isn't inflationary. But at the moment, I think crude's quite steady. I have a small bias to the top side, but that's only small.
Okay. Jonathan, I do want to ask you about safe haven as well. And I guess to a certain extent that gets pushed onto the back burner with all of these positive developments coming through. But having said that, in your opinion, globally, has smart money already moved a little bit away from gold? At least that red hot rally that we saw, maybe a couple of months back, that paused, of course, but does there, or do you see more money leaving gold?
Look, I think it's always a knee-jerk reaction when that happens. I mean, let's also think too that Monday's sort of the time when the markets are hasn't got the liquidity as it happens when Europe and the States open. So I often find that sort of doesn't lead into the actual trend. But I do think the trends for gold are still there. We need to see more data. Remember, this week we've got inflationary numbers out of the States. Let's see what happens there. I'm still long. I think I'm smart-ish, but I'm still long gold and happy to be long gold because I think it'll go high.
Target, do you have a target?
Look, it's very hard to, on a market that's gone to record highs, right, and continuing that way, it's very hard to put a top in place. But I guess I'll see the challenge of the highs up around that, 3,500 or 34, 34.50, that sort of thing. I see a challenge to that high again. Let's see what happens from there. But given the set of macros that we will be dealing with, then there will be people that will take money off the table. If we get a resolution out of the Middle East, if we get a resolution, out of Israel, if we get a resolution out of what's happening in inflation in the state and Powell's happy to lower rates, then that's a different dynamic. But whilst we've still got these dynamics there, I think gold remains a buy and dip.
Jonathan, thanks so much for joining us as always. Pleasure speaking with you.
No problems. Thank you.